Welcome back to the Deep Dive. Today our mission is simple. Give you the fastest possible read on the crypto market's pulse. We're using the crypto outlook analysis that just dropped today, October 27th, 2025, from Vantage Plus. We're going straight to the key technical levels you need to watch. But before we jump into the charts, let's set the scene. What's the bigger picture? Is the fundamental environment actually, supportive for crypto right now?
Yeah, good question. Fundamentally, things look, well, quite positive, actually. That whole equity market correction we saw, it's fully reversed. U.S. indices are hitting new all-time highs.
Okay, and that's tied to inflation, right?
Exactly. It stems directly from that better-than-expected inflation report we got last week. Because consumer prices are falling, the thinking is the Fed should feel comfortable cutting rates this week.
Right. The cheaper liquidity argument.
Precisely. Cheaper liquidity, capital flows more easily into risk assets.
Now,
Historically, that boosts the NASDAQ, the tech index.
which tends to pull crypto along with it.
That's the typical pattern, yeah. It usually acts as a prime driver for crypto demand.
Okay, so cheap money sounds great. But the analysis highlights a potential problem, a counterforce, the U.S. dollar, the greenback. Why is a strong dollar such a big deal here? If the Fed's making money cheaper, shouldn't that override dollar strength?
Well, that's the core tension, isn't it? A strong dollar generally acts as a dampener on risk assets like crypto. It sort of weighs things down. So while the fundamental story might be saying go, a strong dollar could be hitting the brakes. We need the charts to confirm buyers are actually stepping in despite that headwind.
Which brings us neatly to the technicals. Let's get into it, starting with the big one, Bitcoin. Currently trading around $110,885, just under 111K.
Yeah, and technically, Bitcoin's looking a bit shaky right here. It's kind of falling behind. Seems like it's set to test that really crucial psychological level of $110,000.
And that's significant because...
Because on the weekly chart, the 50-period moving average provides support right around there, that weekly 50 MA. I mean, it's often seen as a key indicator for the long-term bull market's health.
So a break below that could be quite serious.
It could, yeah. It might open the door for a much deeper correction.
Okay, so what do we need to see on the upside? What's the trigger for more bullish momentum?
The analysis points to $115,000. That's the sort of line in the sand. Breaking that, and crucially, also taking out the most recent candlestick high that would signal the short-term correction might be over.
Shifting sentiment back towards bullishness.
Exactly. But until we see that, the source suggests, maybe wait for a bit more clarity.
Got it. Now, if Bitcoin is struggling near $110, what about Ethereum? ETH is at $4,937. Is it just following Bitcoin's lead?
It largely seems to be, yes. It also looks set to potentially weaken a bit further short term. Looking at the monthly chart for ETH, which gives a longer perspective, a clear break above $4,500 is needed for real upside momentum.
And what about downside risk? Key support.
The main concern is the $3,900 level. For the long-term structure to remain healthy, ETH really needs to close the month trading above $3,900. Even if it dips below temporarily during the month, that end-of-month close above $3,900 is key.
Okay, let's switch gears to Ripple, XRP. It's at 2.5098 ounce. The report mentions it's stabilized after a fall, holding above $2,3300. That sounds a bit more resilient than BTC or ETH right now.
It does, yeah. And that's interesting. While Bitcoin is facing this immediate resistance, XRP seems to be finding some positive sentiment, particularly above the $2,500 mark.
Any fundamental reason mentioned, or purely technical?
The report sticks to the technicals here, but if XRP holds above $2.50, the next major target mentioned is the $3 area. Getting there could set it up for potentially much higher levels. It might suggest, some capital rotation into altcoins with clearer near-term paths.
Interesting possibility. Finally, let's touch on Solana, SOL, trading at $193.32. The source says the slide stopped, but upside seems limited, kind of stuck.
Yeah, stuck is a good word for it, like it's in a holding pattern. For SOL to get going, it needs to break above $195 first. That would open the path towards the 203 resistance zone.
And what's significant about $203?
That's where the 50-day moving average is sitting right now. It's acting as resistance. The daily chart suggests SOL might just stay in this sideways trend for a bit until there's a clear breakout above $195 or maybe $203, offering a fresh entry signal.
So, summing up, there's this tension. The potential for cheap liquidity from the Fed is pulling upwards, theoretically, but the strong dollar is pushing down, and the charts, especially for Bitcoin, seem to be reflecting that downward pressure right now, testing key supports.
Exactly. It creates a bit of a puzzle for the immediate future. And maybe this leads to a final thought for you, the listener. Given that Bitcoin seems to be facing pretty strong resistance right overhead.
Well, some alts, like XRP, according to this source, have clearer upside targets if they break local levels.
Right. What does that difference in technical clarity suggest to you about where risk appetite might be shifting in the very short term? Are traders perhaps looking for maybe easier plays in some altcoins while the big one, Bitcoin, sorts itself out? Something to consider. We'll see you next time on The Deep Dive.